Hi, everyone. So, dental provider fee scheduling and insurance management, which is often linked to a dentist contracting with an insurance carrier, can be a burdensome process for both dentists and dental plans. Now, there are numerous challenges tied to insurance, such as complicated billing systems, delays in reimbursement, and managing various insurance plans. And on top of that, staffing issues and the need to deal with multiple insurance companies while maintaining compliance with their policies can really be overwhelming for dental professionals. And dental insurance plays a significant role in your practice today. It not only affects your revenue, but also influences patient decisions. And many patients choose a dentist based on their insurance network, and their coverage often dictates whether they will move forward with recommended treatments. And as a practice owner, a solid understanding of dental insurance can really strengthen your relationship with patients, which helps build the trust as well. And of course, insurance also encourages patients to visit the dentist regularly. Those with dental insurance are, of course, more likely to seek preventive care, which improves their not only their oral health, but can also lead to a more consistent revenue for your practice. However, insurance companies often require substantial discounts off your fees to join their network, which may push practices to focus more on quantity rather than quality. Now, whether you are running a PPO practice, competing with other in network dentists, or acquiring a new place, insurance contracting process is very intricate, very time consuming, and often results in low fee schedules. So, by increasing your revenue, you can reinvest in technology, equipment, staff, and marketing. In fact, with proper insurance management, a practice can retain as much as $115,000 in revenue annually. So, to dive deeper into this critical topic, we're bringing you this podcast. I am Simran from Confido Health, an AI powered dental and healthcare receptionist company, and I'll be your host today. Joining me as my co panelists are Nishant Pandit from Built Easy, a dental practice management firm, and Harsh Bansal from Remedo, a dental marketing firm. And today we're excited to welcome Katina Satterfield, the Business Development Manager at Dental Advocacy Group, or DAG. Now, DAG supports more than 1,000 dental practices and DSOs across the United States by providing solutions to streamline insurance enrollment, secure higher reimbursements, and improve practice revenue, essentially acting as a bridge between dental practices and insurance companies. And Karina brings over 30 years of experience in the dental industry, including her role as a regional manager at dental offices and as director of operations at a dental consulting firm. So, Katina will be sharing insights on the major mistakes dentists make when handling insurance and credentialing and fee schedules, and discussing the current trends in these areas. Thanks for joining us, Katina. Do you want to start with a little bit about your background?
Of course. Thank you so much for having me. I'm excited to share my 30 years of knowledge in the dental field, but lately, of course, what we're talking about today is insurance and how to help practices, just be more profitable. As you said, my background started in 1995 in dentistry. Sounds wild to say 30 years. Mainly managing private practices and also a couple group practices. So I have experience in your single practice, your small groups, and larger groups. I've worked with all specialties and general dentistry. So I feel like I have a wide range of knowledge in all those capacities. I've been with Dad now for 3 years, diving into the insurance world. Prior to that, my 27 years in dentistry, I felt like I had seen and heard it all, right? And when you're in the practice, you're kind of in the grind of everything, and you don't know what you don't know. And insurance companies do make it really confusing and complicated because they just want you to throw your hands up and take the low fee schedules that they give you. So with Dental Advocacy Group or DAG, we're able to help streamline those, get higher reimbursement, and get some of that, all the minutia, all the extra noise out of the office where the team can actually focus on patient care and not have to be so consumed with insurance.
Hey, Katina, thank you so much for joining us. I mean, this is lovely. I think we all met at one of the conferences, and it was great. Talking to you regarding not only like the dental fee schedules or anything, but just to talk about different things in dentistry. So that was great.
Mhm.
And again, thank you so much for joining us in.
Of course.
We do have a lot of questions, not only from our side, but also so many of our clients have so many questions. And again, like there's some questions which we feel that we know the answers to, but do we really know those answers, right? Uh, we'll start with some questions, and again, let us know what do you think about those questions. I mean, like, and then let us know. I mean, if anything else that needs to be added. My first question to you would be: it's a very basic question, but it is really important because a lot of our dentists, our clients, are starting fresh. When we start up an office, the first thing that comes up to our mind is when we get a dental software is to add the fee schedules, and the first fee schedule that we add are the UCR fees. So my question to you is, what exactly does someone mean when they say UCR fees, and how do we select a UCR fees? Because I've seen different regions have different UCR fees. So if you can.
Correct. Great question. And that is a question that we have seen a lot of practices not really know where to start. Number one, how do you establish those UCR fees? And the UCR fees are the rates that are the market rates within your zip code, where your kind of your sweet spot is. They're measured by percentiles. It goes from the 40th to the 95th percentile. There's a couple companies that they pull all the data and they rate those each year. One of them is the NDAS, which is the National Dental Advisory Services, and the other one is Fair Health. Both of those pull data from claims that were submitted from the offices. So the insurance companies, number one, they know the practices UCR. And what they're doing when both of these companies pull this data, they're looking at it, as an aggregated data stream. So in each zip code, what range are these dentists billing in? And what happens if you're not in a healthy place with your market fees? Most practices say, what does it matter? If I'm a network, I'm only going to get paid the fee schedule amount anyway. But why it matters is they're correct. They're not going to get paid anymore if their fees higher. But what these companies are looking for when they're doing the annual comparisons is they're setting the UCR fee from what the doctors are charging. So if you have multiple doctors in one zip code that are underbilling, then that market's fee schedules are going to be lower. And also, when they go to renegotiate, hopefully they're going every 2 years and trying to renegotiate their contracted rates with insurance companies if they choose to be a network. The insurance company already knows what they're billing because when you submit a claim, your UCR fee goes on the claim.
Mhm.
So they're looking to see how much of a discount, or when I say discount, how much they're writing off from their UCR fee to the contracted rate. So for example, if you are, you know, you're cleaning, we'll just use easy math. Let's say your cleaning fee just for your cleaning only is $100,
Mhm.
and the reimbursement rate from the insurance company is $60. You're writing off 40% of your revenue to take that insurance. So it's very important for that. If your fees are not where they should be in the marketplace, let's say you're billing in the 40th percentile, which is really kind of the lowest. It can be lower, but they don't keep track of what those fees are. So we have many practices that we've seen that are billing below the 40th percentile. So what is going to happen is it's going to keep their contracted rates even lower, right? Because the insurance company is going to say, well, your rate is only $60. So I'm going to pay you 30 or 40. But if your rate's 100, then you can get, your fees where they should be as far as your contracted rate. We work with all types of practices from startups, acquisitions, people that's been in practice for 40 years, de novos, all of these different types of practices. And the best thing they can do is when they're starting out is you can purchase those, your market rates for your zip code from either one of those companies. And, or if you have a great relationship with one of your dental reps, where you get your dental supplies, sometimes they'll supply that for you at no cost. So it wouldn't hurt to ask, if you want to look at that. So you want to start off on the right path and get those rates set where they should be. If you're an existing practice, it's very important to go ahead and get those fees, compare your fees, see where you fall. What we recommend is if you're a startup or just starting out, kind of the sweet spot, and it's going to depend on your demographics and your goals, what type of dentistry, that's going to factor in a little bit. But to start out, the 60th to 70th percentile is usually ideal. If you're an established practice that takes insurance, 70 to 80% is typically ideal. If you're a fee-for-service practice, around 80% is good. But if you're an established practice, you're not in network, you're a specialist, or you offer some cosmetic dentistry with some special services, you could then go to the 90th to 95th percentile. But the normal average everyday practice should not be billing in the 90, 95th percentile just because it's going to price their fees so far out. It's going to deter the patients that, are cash paying, non-insured, or if they're out of network, maybe they have insurance, but they're out of network. So they have to pay the difference between the insurance fee and the office fee. So if their fee is so high, that's going to price them out of a lot of patients, and especially with them moving forward with treatment. So it's really important to make sure you're billing in the right percentile. Once you set your fees in the correct percentile, the average recommendation to increase your fees every year is 3 to 5%. So I've met with many practices that set their fees and then they haven't changed them in 5, 10 years. So you can imagine how quickly they get below the 40th percentile by not increasing their fees, the 3 to 5% each year. You don't have to pay for the fees every year. I don't feel like that's necessary. You can if you want to. But I feel like, maybe every 5 years purchasing the market rates and just making sure you're within the right market. But if you're consistently every year increasing them by the 3 to 5%, you should be good to stay within your market rate.
Makes sense. No, that's super, super helpful. And I think it's a great overview for someone who's completely new. For example, I just had heard of the term, the
Yeah.
UCR, because we do not deal with it so much. This was really helpful to
Mhm.
know. I might ask a very silly question, but I do want to understand that, does kind of geography also play a role in this kind of fee structuring for dentists? And like, let's say if there's a dental practice in a specific neighborhood and like the competition is really low. So one, how can like they optimize it apart from the fee schedule, like apart from the fee decision, what are the other things they can do to optimize their practice and their fee? And second, what are the most common mistakes you've seen in the dental world that people are doing that kind of does not help them optimize that?
Yeah, of course. Well, some common things that right now is happening, it's not really a mistake on their part, but the industry right now is short of dental professionals. A recent survey that just came out stated that in the US, there's a shortage of over 7,000 employees for the dental market. So, what is happening is offices are forced to pull from other markets where they're bringing in team members that do not have dental experience. And so that's not the mistake. But what the mistake is they don't truly get the training on how to do simple things. Most people think, oh, anybody can answer the phone and make an appointment, right? It is not true. There's an art to that. There's a skill to that. You have to take control of that conversation. You can't let the person calling on the other end control the conversation. Your main goal on that phone call should be to convert that call to an appointment. You want to schedule the appointment. And you would be surprised at how many offices don't possess that skill or that art. And that's one of the main things I think that is kind of the consensus is, oh, they can answer the phone. Oh, they're great. And to hear the doctor, say it, they'd say, oh, Susie's great. She answers the phone. She does an amazing job. But really, when you go to start tracking, the ROI on how many of those conversion rates, how many of those phone calls are actually being converted into a patient, that conception might change a little bit. So it's really important to have a well-trained team. I think that's one of the things that, you need to invest in your team to make sure that they are doing those things and answering the phones properly and taking care of the patients and learning how to overcome those objections. And even if they are out of network, you can convert those patients if you know the right verbiage. You need to build the authority of the doctor and let that patient know you absolutely called the right place. We're going to take great care of you. So it's all in that phone call. And that's their first impression with the office is that phone call. So it's very important that it's mastered and that patient feels like they're the only person that matters and that it's converted. So I think phone call is one. Another, I would say, challenge or pain point is the actual schedule. A lot of times, what I see is the schedule runs the office. The office don't run the schedule, right? So dentistry can be chaotic anyway, but we want to make it be a little bit of organized chaos. So one way to truly make that happen is doing block scheduling. And Nishant, I'm sure that you
Yeah.
probably deal with that and working with practices, and you'd really be surprised in how many practices do not do the block scheduling. They're just putting in whatever in the schedule, and the doctors and assistants are running crazy trying to accommodate everything. But if you could easily put some blocks on the schedule on how, each doctor is a little bit different on how they like to, do their dentistry. Some dentists like to do all their big hard cases in the morning and then the afternoon kind of, let it fly. Some of them like to be, spread out throughout the day. But it's important to, not run your team ragged, number one. But number two, it's going to help with productivity. It's going to let you put what you want where you need on your schedule. And it's also going to, alleviate those pain points. And when you have the blocks, you reserve times for like emergencies, new patients, different things like that. So when they call in, an emergency is not waiting for a week before they can get in for an appointment, and a new patient is not waiting 2 or 3 weeks to get in. Because what we all know is they might make the appointment, but they're probably going to call somewhere else and see if they can get in sooner. And if they can, they're going to either cancel their appointment or not show up for the appointment, which is even worse. So making sure you have your schedule to accommodate your overall goals, I think is really, really important. And then just having an SOP.
Right.
When I did consulting, it was amazing how many practices did not have an SOP. And, those are all of your procedures, all your operating procedures that how to do. So I would always ask, they always say, oh, the office manager knows everything. Heaven forbid something happens and the office manager isn't there. Who knows how to do XYZ? And the answer usually is no one,
Right.
especially if it's a smaller practice that's, just run by, maybe one or two people in the front. We find that that's the case. The larger DSOs, I see typically do have more of the systems and processes put in place with the SOPs. Not all of them, but a lot of them do. So I think establishing that, it can be like overwhelming to do that, but there are companies that can help assist you in putting that together. And then I think another opportunity that they miss is marketing. And a lot of practices are not marketing, internal or external. Statistically, 60% of their new patients should be coming from their existing patients, from referrals. But a lot of practices don't even ask their patients for a referral or, even a review. And in what I do now, the first thing I do when I get a doctor that calls in, I go to their website, or I try to go to their website. You would be surprised, there's still many practices that don't have a website. And, for me as a consumer, when I go to a new business, the first thing I do is I want to go to their website. I want to see who they are. I want to see their picture, read some reviews. So I think that's very important. And I think a lot of practices miss some opportunities by not having those two things in place as well. I know that was a lot.
That was amazing. And I have to say that you actually touched upon the importance of all our companies and all the work that we
Yeah,
have, because
Yeah.
right starting from the front desk, like that's exactly what, we do, where
Mm-hmm.
AI is trained in like kind of, this
Yes.
conversation, and
Yeah.
literally bridges that gap. And similarly,
Yes.
Nishan deals with, as mentioned, like,
No, absolutely.
calendar or
Mm-hmm.
everything else, and Harsh with the marketing. So, you literally just validated all the work
and
that we do.
this will look like we planted all of this,
I know.
right?
I mean,
I did not. I have some more points. I was just kind of going through, like when I was in a practice, things that I saw, or when I was doing consulting, some of the quick, easy, kind of like the low hanging fruit that you can address to make, big steps in your practice. A few of the other ones are insurance verification. It is so important to verify insurance. There's a lot of practices that are not doing that. And we just talked about the shortage in dental team members that are available. And when you are bringing in those resources, if you are short staffed, outsourcing is their best friend. And most companies, you can do like month to month basis on some of those things. Some require a 12-month contract, but they can at least help your practice stay afloat, because what's going to happen when you are short staffed, the things that are not staring the team members in the face is what's going to get neglected, like their AR, the insurance verification. And if you're not verifying insurance, how do you know what to quote the patients? How do you know that they're really even effective? They've given you a card and it's got an effective date, but has it been terminated? Did it change? Did they give you the right card? So what happens is, if you're just submitting the claim, you're chasing down that revenue stream for months, and sometimes you never get it. Patients are typically happy to pay at the time of service. It's after the fact, it gets harder and harder to collect. I believe that the last I checked, anything that's over 90 days patient balance, you only have a 7% chance of collecting that. So not only are these, offices that are in network that are getting low reimbursement, if they're not verifying benefits and not collecting that money up front, that's making that 40% discount that we talked about early grow, because now you're not collecting your patient portion as well. When I did consulting, I used to look at all of the things and I'm like, okay, let's think about what can we delegate, eliminate, or automate. So we look through those things. Is this absolutely necessary? If it's necessary and we don't have the capacity to do it here in the practice, who's a great company that we can look at and outsource that? And that might be indefinitely, or it might be for a short period of time until they have the appropriate team to take that back into the practice.
I mean, the points that you brought in, Katina, were great in terms of the training or how do we even pick up phone calls. I mean, just simple things when like company like Confido calls those patients who miss their appointments, or a company like Remedo who does a lot of marketing. I fully agree to your point that they need really good training in terms of how to convert those patients into like coming into the schedule. But
Mhm.
I've also felt it many a times that the offices, patients love those offices where the front desk can easily or can understands how to let them know about the copays, right? I feel a lot of times dental offices teach them a lot of big DSOs give them scripts of how do you talk to those patients, which is a great thing, like having good SOPs. But what are your comments on how should be the basic training done for a front desk once they know understand how to pick up phone calls, how to talk to the patients? But what do you think? What should be the steps that the dental offices should take in making these employees understand how to read fee schedules or how to understand what to say to the patients about copays and all those things?
Mhm. That's a great question. So when you are verifying benefits, number one, you want a very specific breakdown of benefits. You want to, ask specific questions, like what percentages per, category, the deductible, is it waive for preventative? Are there wait periods? Are there missing tooth clauses? So there's very specific questions that you want to ask. Is there a replacement time frame? So like most people, if they're having a crown redone, most insurances only pay for that every 5, 7 to 10 years, depending on what policy you have. So knowing those limitations and exclusions is very important, but also just making sure the patient has enough maximum to do the work, right? Because they only get so much per year. So I think the more information you can get on the front end, and properly putting it in the computer, that's
Mhm.
another thing. I think a lot of practices don't utilize their software to its full ability.
Right.
So if an office is a network and they have a fee schedule for an insurance company, they load that fee schedule in their software. When the patient comes in, they attach that fee schedule to that patient's chart, and then it makes it easier to treatment plan. It's going to have the office's UCR full fee, but then it also has the contracted rate. And they can quote, as long as they've put all of the verification of benefits, the percentages, and all the exclusions, all of that in the computer properly, software does all the hard work for them in quoting, the fees. You really want, normally most practices have that person in the front that's collecting all of that on the front end. And then when the patient is, finished with their appointment, they're brought up to a treatment planner. And the treatment planner, you want to have a rock star in that position. But it only don't just fall on the treatment planner. It really does, the whole team, the whole experience comes down to whether that patient's going to come back or follow through with treatment. How were they greeted when they come in? How was their experience? Were they taken by the hand and led through their appointment and made to feel like, they were listened to and heard? And, it's really important for patients to have those things. And it's the doctor who's, when they're describing that treatment and letting the patients know what they need to have done, it's again, I use the word art with scheduling. It's an art with treatment planning as well, because you have to know how to overcome those objections. You can't be scared to tell a patient what they need. um, and you want to identify with them. If you were my brother, this is what I would do for them. This would be my recommended treatment. If you were my daughter, here's what I would do. So you can identify, and that patient goes, oh, they would do this to their mother or their daughter, so they can identify that. And you let them know what the benefit of that treatment is, not just, like, oh, your tooth is cracked and you need a crown. Okay. Are you having difficulty chewing on that tooth? Well, imagine not having that pain or having to favor one side or over the other. So you give them the benefits. And then when they come up to the treatment planner, they're confident. Your treatment planner needs to be dressed nice. They need to be confident. They can't be afraid to quote those fees. There's a difference in saying, go through the whole treatment and saying, here's your amount you owe. We've all kind of seen that. They're kind of scared to give that out. Then saying, your copay is, and you kind of go through that and you give them some, you kind of pause and you can read people, hopefully. They have a EQ, right? So if your patient's like, oh, great, let's get that scheduled. If they don't schedule, read that body language. Do you feel like it was the price? If so, then let's, come up with some solutions to help them move forward with treatment. Is it time? Is it money? Are they afraid? So, kind of once you hone in on why they don't want to move forward with treatment, it makes it a little bit easier to convert that patient and have them schedule that treatment.
Makes so much sense. So, Katina, you actually touched upon a lot of points, in this conversation. We, just trying to bring, some of the questions which I don't have an understanding, and some of the practices would probably also struggle with.
Sure.
So, can you shed some light on essentially what are deductibles, what are copays, what are annual maximums that you
Yes.
spoke about, just so that the practices or anyone who's looking to start a practice can just understand the basics of all of this.
Yeah, of course. So percentages are what percentage is covered on the plan per procedure. So preventative, which is cleanings, exams, x-rays, diagnostic basic procedures are preventative. Normally, on average, that's covered 100%. Occasionally, and the deductibles normally waived. Occasionally, you might have a plan that covers it at 80% or makes the $50 or $100 deductible apply, whatever their deductible is. The annual maximum is how much of the benefit they get per year. So normally what we see is 1,000 to 1,500 is average on what each person on each. So like if you're a family of 5, each person in your family gets their own $1,500. So once that $1,500 reach, the insurance won't pay any more out of pocket. Patient can still obviously come and do services, but that's the maximum amount that the insurance company is going to pay. I like to tell patients, insurance is really like a coupon. You get a discount off of some of your services, and ultimately, you're responsible for your dental care. And they chuckle and they're like, yeah, that's kind of what it feels like. Unless you're just coming in and getting your preventative services. When you get into restorative, so a lot of times your basic restorative treatment, which is like fillings, periodontal cleaning, so like your deep cleanings, sometimes root canals, endo, sometimes that falls basic, sometimes it falls major, just depending on your plan. Those are the types of services. Sometimes oral surgery, some basic oral surgery falls under your basic plan, which are normally about an 80% coverage with a deductible. And then major services are bridges, crowns, dentures, implants, partials, maybe some extractions, maybe some endo, depending on your plan. And those services are covered at 50% with the deductible applying. And you just meet your deductible one time per year. A lot of times, if it's a per person deductible, but it usually has a maximum family deductible of like $150. So not every single person sometimes have to meet the deductible. Maybe only 3 people have to meet it, and then it's met for the year. Each plan is a little bit different, and that's why it's so important to verify those benefits and put that in your software so that is calculated as you have treatment throughout the year.
Right. That's actually too much information for probably a practice to process. And it brings me to a question: how does a practice? How should a practice really go about selecting which insurances should they be partnering with? Where should they be in network, and how to choose that to maximize? What they want, obviously, from a practice, at the same time also the revenues, right? So how should they go about that?
That's a great question. If you are not in network or if you're a startup, once you establish your UCR, it's important to reach out to, we recommend going through an umbrella. So an umbrella policy is one contract, one fee schedule that hosts multiple payers. So most of them have, 30, 40 payers that have that one fee schedule. So what that does is it makes it very simple for the office because there's only one way in. There are a couple of the bigger plans that do not participate in umbrellas, so you might have to have an additional couple direct contracts, and that's okay. If you do have to have any of the direct contracts, it's recommended to opt out of their network sharing. And what that means is some of the insurance companies lease their network or share their network. And what that looks like is, for example, let's use Aetna. Aetna, you can have a direct contract, but Aetna also shares their fee schedule. They share their fee schedule with like Emeritus, Guardian, Principal, United Concordia, Sun Life. So what that means is if you don't have a direct contract with those other payers and you have a direct Aetna contract, they can use their fee schedule on all those other payers. What happens when you have multiple directs and multiple umbrellas? It's usually best policy to only have one umbrella. We have seen practices that's had 3 or 4 umbrellas and 20 direct contracts. And what happens in that aspect, especially if they don't know to opt out of network sharing, and I would say 95% of them don't know what network sharing is, and that's normal. I really didn't know what it was either until I came to DAG. I kind of felt like I'd heard the term and maybe understood it that much, but really didn't understand the whole aspect of how it impacted the practice. So when you have multiple umbrellas and multiple direct contracts, what it has is there's different avenues for different plans to come into each insurance company. So you could have one insurance company, but you could have 5, 6, 7 fee schedules attached to one plan. And what the insurance companies are doing when when you call to verify benefits, they're going to tell you you're a network using this fee schedule. But ultimately, what happens when they get the claim, they're actually looking at those fee schedules to see which insurance company is going to pay you the least. Yes. So they kind of switch it up and they change the fee schedule. So two problems here. Number one, your patient gets the EOB and they're like, I didn't pay more than that. They overcharged me. So it creates some distrust. And it's not the office's fault because they're only doing what they were told to do when they called to verify benefits and they paid out or quoted that fee schedule. But the insurance company changed the game and they pay a different fee schedule. So the office either ends up writing that amount off, throwing their hands up because they don't even understand why they got paid that amount, number one. What I normally hear is, this is our fee schedule, but that's not what the insurance company pays us on. They pay us less, and they're not really sure why that's happening. Or they bill the patient gets upset, and they lose the patient. So those are a lot, and it's less revenue, right? So best practices is to do as few direct contracts as you have to, opt out of network sharing, do an umbrella plan, because the umbrella plan typically has the highest fee schedule. So if you have the umbrella with a bunch of directs with the network sharing, what's going to happen is that those other network lease arrangements are going to take precedence to your umbrella. So you're never going to capture that higher umbrella rate because all of those other relationships are moving in first place. Did I explain that well? Does that make sense? That's one of the hardest subjects to explain. I tried to simplify it, but it's kind of hard without explaining the whole scenario.
No, absolutely. That was a great explanation. And thank you so much. With that context, I think a lot of dentists do have these questions is their PPO contracts. They have this
Mm-hmm.
question that how can they simplify their PPO contracts, which are already in place because they have these
Mm-hmm.
questions. So if you could shed some light on
Mm-hmm.
that.
Yeah, of course. Going back to the umbrella, if there, if you can get a nice fee schedule with an umbrella, you can terminate or minimize some of the direct contracts, so they now fall under your umbrella. You wouldn't want to do that on your own. You would definitely want to contact a specialist that does that for a living, because there are some stipulations, there's some different rules, like some insurance companies put you in a penalty box if you do that. So you need to navigate through that and figure out how to not lose your patients during that out of network period. So there are some challenges that you need to overcome. But that's usually best practices, is trying to get rid of many directs as you can. And if you have to keep a direct, opting out of that network sharing to where they can't share that fee schedule with other payers. We also encourage, sometimes practices have discount plans. So it's a plan to where, they come in, it's a discounted rate, but the patient pays the full rate up front. What we normally encourage them to do is have some type of in-house payment plan, not payment plan, but like an in-house, what's the word I'm looking for? In-house plan where the patient pays a membership fee. They get discounted, rates on their treatment, plus they get their exam, cleaning, x-rays covered for the year. So ultimately they're saving, typically on preventative, they're saving about 30% up front. And then if they need any treatment, it's really up to the dentist on where they, what percentage they give them. But we've seen anywhere from 10 to 20% discount on treatment. And we all know when you have a membership plan, you buy more, right? Think about your Amazon or Costco, right? When you have a membership plan, you feel like you can purchase more. So we encourage them to drop the discount plans and implement some type of in-house plan on their own that they can facilitate. And it's going to retain those patients that don't have insurance. And it's going to give them, the option to do that treatment and feel like, they're getting a discounted fee, which they are. So people are going to move forward. Their non-insured patients are going to move forward with treatment. You wouldn't give that to a patient that had insurance. It's just for non-insured patients.
Sense. Yeah, super,
Did I
super
answer your question?
Yeah, you did. You did.
Okay.
Absolutely. Thank you.
awesome. And I think we did touch upon this a little bit, but how would a fee for service practice benefit from going in network? Like, is there a
Yeah.
difference in, practices that are not in network versus the ones who are, and like, how does
Yeah.
that look like today?
Yeah, no, that's a great question. I met with some of my coworkers yesterday, and we were just kind of doing a PowerPoint for, when we present to patient or clients to show them kind of what we do. And one of them had shared a statistic with me that was a little eye-opening. Dentist retirement ages. Over the last 2 decades, it has went from 64.7 years old to 68.9 years old. And, we kind of look at that and we're like, well, it's harder to retire because they're writing so much off on the insurance companies. And, everything that we mentioned in this webinar attributes to that reason. So doctors are having to work longer. We had a client that gave us a testimonial not too long ago, and it literally brought tears to our eyes because he said, I can look at retiring now. Prior to joining, your forces and you helping me with my insurance and, maximizing those fee schedules, I saw no end in sight. I now have a goal to retire. So, it's not just making practices more money, it is, but it's life changing when you're able to, align those contracts and, make it to where the vision of the doctor is coming into play, and that's conveyed with the team, and they're able to, as a whole, together, collectively, make those things come to fruition. It's really kind of a beautiful thing. But with practices that are fee for service, so there's a few things. You don't want to just sign up with insurance companies. You would want to evaluate your data. So number one, you want to look at capacity. Do you have capacity to add patients or to add another provider? What are your goals of the office? If you are at capacity, you're open as many days as you can be open, the schedule's full for months in advance, you do not need to go in network. Fee for service is absolutely the way to be. But if you have to be in network, you want to make sure that you're getting the best rates you can. Ultimately, the umbrella is usually the way to go. But if you are a fee for service practice that you are doing, you're doing the marketing, your team is trained, you're doing block scheduling, you're doing all of these things, and you're just stagnant, or you've hit a plateau, or sometimes even a decline. And going to network would be the next logical option. But you would want to see what that impact is. So you want to look at what you're billing in those payers that you're going to go and network with. So for example, if you're at a network and let's say you're only billing, $50,000 in a payer, you're getting $50,000 because you're out of network. So you're getting your full fee. If you go and network, you are going to gain a lot more patients in that market. It could quickly go to, $200,000 in that payer. But with you being a network, so now maybe you're writing off 30% if you have a decent fee schedule. So you're now getting 140,000. Is that the math? I'm trying to do it in my head really quick. I should have used 100,000. Yeah, so it'd be 140,000 that you're getting in that payer instead of 50,000, right? So you're doing more quantity, but you're not writing off 50%, which is what we normally see when we analyze fees, when we look at a practice, when their UCR is set within their market rate. The average write-off for insurance companies are 40 to 60%. When you get to 50%, that's like seeing every other patient for free. When you say that to a practice, it makes them a little nauseated. And because they don't really think about that. And a lot of times they haven't raised their fees because they're like, we don't want to see the write-offs, so we don't raise our fees. You've probably heard that before, right, Nishant?
I have, yes.
For sure. So, getting a great contract, and what a lot of offices don't know, they will negotiate. There might be one payer, and I won't mention them by name, that won't negotiate. But the majority of all the other payers will negotiate, and usually they'll go back and forth at least 3 times. So don't settle on that first fee schedule that they give you. Push back on them and push back until they say, no, this is the final offer. That would be my most probably valuable information if you want to go and network. Make sure there's no network sharing to where your team don't get confused on the fee schedules. So that's why umbrellas are the best. So you just have that one fee schedule with all of those payers.
So that does bring me to to what are the typical pain points that you're seeing with when you're working with these thousands of these practices that you're working with. What are the typical pain points that you actually notice across these different practices that they are facing on a regular basis, especially with whatever we are discussing right now?
Well, back to the network sharing, that is probably the biggest pain point with practices when they are contracted with multiple plans. They just don't understand the network sharing and why are we not getting paid what we're supposed to get paid. I think that's probably the biggest challenge that we see. And once we explain that, it's almost like an aha moment for them. And they're like, oh, that you just brought so much clarity to our day to day because we had no idea that's what was happening. But it's a tangled web they weave, right? And every contract that's signed, has those relationships, and they continuously change. For example, Cigna just started sharing their fee schedule with DHA Sun Life as of March 1st. So if you did not have a contract with DHA Sun Life, but you had a Cigna contract, what they do is they send you a letter hoping it gets lost in the mail, and they say, congratulations, and they make it sound like a good thing. But really what's happening, you may have been getting paid your full fee for Sun Life DHA. And now all of a sudden, unless you opt out and send that letter back, they automatically opt you in. So things like that, you need someone to really kind of be your eyes and ears and watch out for things like that to make sure that they don't get intertwined back in your practice. Once you've kind of cleaned everything up and you've got one fee schedule per insurance company, and or you're either out of network with that particular payer. And, there are some payers that pay really well out of network. There's really no need to go in network with every single payer. They have out of network benefits, and they have great reimbursement being out of network. So those are the types of things that we, educate our clients on and help guide them. Our overall goal is to help them streamline their, like you said, Simran, in the beginning, streamlining those processes, getting out of that network sharing, and making the practice more revenue.
So, just like an added point to what you said would be, how would you generally, let's say, recommend offices that how should they set certain benchmarks for them, and how can they keep a track of that on an ongoing basis?
Benchmarks are very important. Some people call them benchmarks, some say goals, some say KPIs, key performance indicators. So they're called so many different things, but really all the same thing. So again, it kind of starts at the top. You have to see what the doctor's vision is, what goals that you guys have aligned, and you want to set up goals that make sense. You want to look at your historical data, see what you've done in the past, and set goals to do better, right? But you can't just set a goal and say, we're going to do this. You have to put things into play. Like if you're only getting 10 new patients a month and you want to have 25, and you just say, hey, our goal's 25, let's go for it. What's changed? So, going back to some of the things we talked about earlier, how's your team answering the phone? Well, number one, are you getting the phone to ring? Are you doing internal, external marketing? Are you letting patients know that you need patients? Those types of things. So is the phone ringing? If the phone's ringing, is your team members converting those calls? Right? So I think it's kind of a full circle where it all comes full circle, right? And you just want to make sure that all of those things are being done. And if they're not, you want to, reset kind of what your processes are to reach those goals. I think some of the basic goals that every practice should track. And Nishant, you might, be more into this than I am, since it's been 3 years since I did consulting. But what I always did was, new patients, and where are they coming from, right? Your AR, insurance is vital, because that's one of those things that sits in the background that nobody's looking at and can spiral out of control really quickly. So you want to monitor, the insurance aging and the patient aging. And then, there's depending on, what goals you have, there can be personal goals that you're tracking. But I think where most practices make the mistake is they set a goal, this is our goal, and they don't even look at it to the following month. Someone needs to own each KPI. So I'm going to own new patients. So if my goal is 25, but I don't have an appointment for 2 months, I need to make sure that there's block scheduling and that there's enough room for 25 new patients. So someone is owning those specific, and they're tracking that. And they're like, okay, 25 new patients, and we're open this many days. So, do the math. We have to do 2 new patients a month or whatever that total, I mean, 2 new patients a day, right? 2 new patients a day. So you want to make sure you have 2 slots for 2 new patients a day, right? And, you don't let anyone violate those blocks unless it's, the evening before, then you can kind of put something else in there. But you want to make sure that you have those open so you can reach those KPIs or those benchmarks. And, because if you're looking at them daily, you can do something about it, or you can readjust and figure out how to reach those goals versus having a meeting, in April to look at March's benchmarks. And you're like, well, we missed it by 10 new patients. There's nothing that can be done about it. So I think it goes back to being proactive instead of reactive, and really having a plan put in place when tracking those goals. And accountability. Accountability is huge. That person that owns it, it may not be their sole role to do it all, but it's their role to track it and make sure that it happens, and see that each team member is doing their role to bring that, to life and make that happen. Would you agree, Nishant?
I agree with you, absolutely.
Yeah.
I mean
Yeah.
that like your points on AR reports and all those things are so accurate that we tell our team every day that we should breathe those numbers. We should know what the AR reports are. And
Yes.
accountability is the biggest thing when it comes to off like practice management. So absolutely agree.
Yes. Yeah. Yeah. You got to own it. What's the saying? If everybody owns it, no one owns it. So, um,
That's so true.
yeah. Oh, we're doing that. Somebody's doing that. Nobody's doing that if it's not assigned to them. So I think that that's probably one of the, creating, if you're a small practice, you can still even create a small leadership team where you're meeting maybe biweekly or weekly or monthly, whatever your, goals are. And, you're visiting these, and it's kind of, top of the mind awareness. If you're talking about it, you remember it. If you're not,
Yeah.
it's not tracked, and it's not
Yeah.
even thought about. It's an afterthought because, I've been in the grind. I've been in the front desk. I know I've been a treatment planner. I've done all these roles. I know how many plates they're juggling. I know, you're consumed with what's in front of you. Well, the patient's in front of you and the phone's ringing, right? So those reports and those statistics and KPIs, they're really an afterthought unless you're making that top of the mind by assigning someone to it. So someone's owning it. You have accountability, and you're measuring that and meeting regularly to discuss those KPIs.
Awesome. Super, super helpful. And I love how you are, giving some really great quotes. You just mentioned this one. There was another one that I was just thinking about, the delegate, automate, and what was the third one?
Oh, delegate, automate, or eliminate.
Eliminate. I think
Sometimes,
that's
sometimes we're
eliminate.
doing things that's not even necessary just because that's how it has always been done. Um, that happens sometimes. So it's like, why are we doing this? Or readjust and do it a different way.
Amazing. I think that's
Yeah.
going to be the tagline for this podcast. I love it. Well,
Yeah.
Katina, this has been an incredibly insightful discussion. Like, not only did you shed light on insurance management and fee schedules, but you also shared some really powerful industry statistics and trends that go beyond just insurance. Helping our audience understand the bigger picture of running a really successful dental practice. And Nishant and Harsh, thank you as well for bringing your expertise in practice management and marketing to the conversation. It's clear that optimizing revenue isn't just about insurance, it's about having the right strategies across the board, right? Like KPIs, calendar management, block calendar, schedule,
Scheduling. Yeah.
marketing. And to our listeners, we hope you found this conversation valuable. If you'd like to learn more about Dental Advocacy Group or Remedo or Built It Easy or Confido Health and how they support dental practices, we will include relevant links in the in the show notes as well. Katina, before we wrap up, is there anything else you'd like to add?
Just thank you. It was great to collaborate. I felt like I put my consulting hat back on a little bit. So it was nice to kind of get to regurgitate some of that because I haven't even said some of those phrases in a while. So it was nice to kind of reopen that door and visit. I definitely, when I'm talking to clients, if there's a small nugget I can give them that's outside, like I do that just because I just feel like, I know it. Why not tell them if it's something simple? So thanks for giving me the opportunity to share that knowledge. And I appreciate it. And it's been a pleasure.
Awesome. Thank you so much. And thank you, everyone. We will include our email addresses and everything at the end. And if you would like to see more such content, please subscribe to our channel and follow us. Thank you.